Good morning, guys. How are we all doing? Welcome to the new trading week. Welcome to these absolute disastrous 5.1 what finance, that's it, finance 1.0 markets. Yeah, we are actually in an absolute mess. Congratulations though for so far not having a collapse of the markets this Monday. But like I said, so far US is not open yet. There is still plenty of time in this day for these markets to collapse. It is looking absolutely dire out there. This can't continue. Something I am almost certain that something is going to come out from the Fed, from Jerome Powell this week, most likely, in my opinion, if not next week. About either their QT or the rate hikes. It's unlikely to be the rate hikes. It's probably going to be some form of easing, some form of quantitative easing, some sort of good old QE. They're going to obviously have to call it something else. They're going to have to have some fancy ways of basically not making it look like they're stopping QT and doing QE, but they're going to have to do QE. There has to be QE. There has to be buying of these bonds. There has to be an inflating of this market. I mean, if we want to have this finance 1.0 market, which is basically a Ponzi scheme, then we can't basically try and take liquidity out of said Ponzi scheme if you want the Ponzi scheme to continue, which they do want the Ponzi scheme to continue, and that is basically what's going on. So first let's look at BTC. BTC is just trapped within this little range we've got here. A nice little pump going on at the moment, but as you can see, rearranging deck chairs on the Titanic at the moment. Unless we get a pump and a close above about 20,000, then yeah, we could be looking quite good. But in this sideways range, it's not really that important. And then yeah, closing below or trading below 18,500, we could see a pretty significant move down. I mean, my guess would come down, take out this low, trigger more selling, and end up at least bouncing initially around 16,500, and then just reassessing the situation there. Let's go and have a look at these lovely markets. S&P has not quite taken out these lows. Off the back of this rally, when we got all the way up here, it was statistically unlikely we were going to come and take out these lows. However, statistics are statistics. You can make decisions based on statistics. It's probably a smarter way to make decisions based on statistics, but statistics are nonetheless statistics, and they only speak to probabilities. They do not speak to certainties. So yeah, we could draw a nice trend line here though, and we could also draw a nice is it gonna pick up my here? Yeah, here we go. Or we can draw a nice trend line here as well. So we have got a descending broadening wedge. So plenty of scope to come down lower in towards the 3200s that we have been talking about, to then bounce and potentially trade higher. It does take us into a nicer area of confluence. Just this whole zone here does seem like a nice area of confluence. What we will probably do, I know it kind of like amalgamates a number of support levels, but I do think this general area, if finance 1.0 is to survive this latest onslaught, this is an area that it basically has to hold. If we lose this area, then we're done. We're done. And that may or may not be good for crypto. My guess is it would be good crypto, because obviously finance 1.0 going down signifies the banking system is collapsing, will have collapsed, and the monetary system. So that would then open up an alternative payment mechanism, obviously, which crypto is a fully functioning independent payment mechanism, which obviously we will need. It will be a means of transferring payments, transferring wealth and whatever. And yeah, so yeah, we'll have to see what happens there. Gold and silver will not be as useful. Silver won't be as unuseful though as gold, because it just has a lower price per ounce, so it is therefore easier to use for transactions. So yeah, looking bad there anyway. DXY, absolutely disgusting, right? This is literally, like I've been saying, this is a war on the world, span. This is a war on the world, the countries of the world that aren't the US, that can't basically just print dollars. The rest of the world can't print dollars. They are struggling for dollars, and that's why the dollar going up, because obviously you're struggling to get dollars. Then those dollars go up in price. Yeah, 10-year also disgusting. Also just awful. Just can't realistically continue. This is not as bad though as the implications of the dollar, because that is literally liquidity. Liquidity is the most important thing in the system, and the DXY is indicating that the fact there's no liquidity. The 10-year is just indicating that just the borrowing costs are going up. If you want to borrow, obviously the American government wants to borrow for 10 years, so that has impacts on other things, but it's just borrowing cost. There is other funds, there is other money lying around, and yeah, but there isn't enough dollar liquidity in the system. So yeah, not looking good there. Let's just have a quick look at people I know they've been talking about this, and quite rightly so. The British pound has fallen out of bed here. I mean, it literally, we haven't done much on here, and I am aware that we are on a daily, but as soon as we kind of lost this level, as soon as we kind of lost this level, it wasn't looking good, and here's acceleration to the downside. So yeah, obviously out of the two political candidates we had for taking over the Conservative Party in the UK, Sunak and Liz Truss. Sunak was always the more fiscally responsible one, which is no surprise, and that Liz Truss is the one that got in. Let's just print away all sorts of promises and that is clearly impacting obviously the pound. But don't forget, this is against the dollar, and the dollar is on a tear itself as it is. So independently of whatever we're doing in the UK, we're not able to keep up with the dollar, as the dollar is more demand than the pound, because the dollar is a world reserve currency of the world, not the pound. Japanese yen, after we spoke about what would happen after its intervention, that we would basically end up back up there, exactly where we've ended up back up there. So well done with your intervention. There you go. What else? Ruble US dollar. There we go. Obviously we had a sort of ranging down, a big spike down obviously with the invasion, and now are settling around a higher value, so good for them, I guess. The euro ruble, how is the euro doing against the ruble? Not good. Size lows down here. Obviously that's the euro size lows. Bitcoin dominance, looking to try and push back up here. You wouldn't be surprised to see that happen in this environment. If we are to catch any sort of a bid in this market for crypto, based on people just wanting that liquidity, wanting just to speculate on it, because of potentially there's going to be problems in the actual Finance 1.0 system, then they are going to buy Bitcoin. It's just the biggest crypto, the most liquid, the one people know the most, so it is Bitcoin that would benefit, and more so from that. Is that being reflected in the EURUSD pairing, in the ETH-BTC pairing? Maybe. However, the most important level, I think, to the downside for us to hold, if we aren't to hold here, is this level. If we do lose this, then there's not much really in the way of support realistically before we just come and test the bottom of the range, which is probably going to be around here. So obviously work to do there. Oil, look at it. Oil doing what oil should do. You've literally been saying that this is what's going to happen to oil. It's going to find its way down to here, between the 60 and 70. That was until obviously the US came in with its $80 bid. However, yeah, that is not enough. You can manipulate markets. Not that it was an explicit manipulation of the market. It was just literally just to refill the reserves that they've been drawing on in their special petroleum reserves. But yeah, that is still not enough to prop this market up, and it is coming down. There's going to be some unhappy Arabs out there. But yeah, coming down. It can't, honestly, with the state that we've got going on at the moment, it's impossible for this to go up. No matter what sort of speculative buying or reduction of supplies going on, and also with the dollar going crazy as well. I mean, there you go. Not looking good. Not looking good at all. Gold also can't really deal with the dollar being this strong. There is obviously a rush for dollar liquidity. There's not a rush for gold liquidity. If anything, gold could be sold to get dollar liquidity. And that is the mechanics of what happens when you get market crashes. Gold comes down with the market and then rallies afterwards, because initially it is one of the babies that gets thrown out of the bathwater. Whatever. I mean, it's all looking awful. It's all looking bad. I mean, honestly, in the face of what is happening, to have Bitcoin in and around the 20k level, guys, we got to look at that as a good thing. We really do. Honestly, we really do. 4 hour looking to potentially turn up around these levels. 12 hours kind of wanting to reject the bullish zone and turn down. Daily though is turning up from down here, so that is not too bad. Bi-daily is coming down though. 3-day coming down pretty harshly. 5-day coming down. Weekly looking to potentially turn back up. Bi-weekly down. Monthly still down. So it is a bit of a mixed bag. Here so far stochastic wise. Realistically, we are potentially looking at a stock market collapse here down into the 3300s. If the Fed doesn't do something, that is what's going to happen. The only reason we're not there now is because there are obviously a number of market participants that they think the Fed will do something. The Fed has to do something. I mean, they have to. I mean, it's just you can't. This can't go on. Basically, this just can't go on, and that's that. So. There we go. Welcome to Monday, guys. So yeah, thanks for listening to that. This is not a financial This is not financial advice, and nor am I a financial advisor. So always do your own research, and I shall speak to you guys soon.